move towards a Congress Mukt Bharat. Watch Battleground Karnataka only on Bloomberg Quint.
Well, good morning. You're watching DayBreak on Bloomberg Quint Live, and I'm Alex Matthew. First, let's take you through the headlines. Asian markets head higher, taking a cue from Wall Street, and crude oil continues to gain. Walmart says it's ready for the cash burn at Flipkart. The retail giant says profitability can only be achieved a few years from now. A one-time hit from the Polaris JV and rising costs dent iShares' performance in the fourth quarter. And Titan, Asian Paints and Z are the three nifty companies that are coming out with earnings today. Let's turn to the international markets first, and the Dow extended its longest winning streak in the US in 3 months, lifted by gains in energy stocks. Strong rally in oil prices following President Donald Trump's decision to pull out of the Iran nuclear deal boosted sentiment. The other two averages ended about 1% higher. All right, let's move on now. And in fact, talking about that deal, we spent a lot of time yesterday speaking about the implications of the decision by the US to pull out of the nuclear deal with Iran. Global leaders have continued to sound off on that move. Here's some of what they said.
Until implementation of this decision, we will wait for some weeks and will hold talks with our friends and allies and other signatories of the nuclear deal. And those who will remain loyal to the deal will talk.
Israel has opposed the nuclear deal from the start because we said that rather than blocking Iran's path to a bomb, the deal actually paves Iran's path to an entire arsenal of nuclear bombs, and this within a few years' time.
The nuclear deal with Iran is crucial for the security of the region, of Europe, and of the entire world.
We encourage all parties to continue to comply with the deal, and we certainly will do everything we can to support that.
Well, we clearly have to wait and see how that pans out. Clearly, India also has to reevaluate its trade relations with Iran if those financial sanctions or economic sanctions do come back. Looking at the Asian markets, the Nikkei for one is trading positive still. It's come off a little bit. But it's still trading about 0.2% higher. The Hang Seng and the Chinese benchmarks have just about opened, and they've opened comfortably in the green from what it looks like. We'll have to see how they settle down. This is still the first few minutes of trade in those markets. Well, the Malaysian market also is a very interesting one, and we'll come back to that a little while later in the show because there's a surprise result in the elections there. But let's move on and look at the trade setup for the day in India. Jayesh Khilnani and Agam Vakil are here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Morning, guys. Jayesh, first to you. The SGX Nifty is still indicating just about a flat opening, but I think it's come off significantly.
That's right, Alex. In fact, the first half an hour of trade has been quite volatile. Currently, it's showing a downtick of about just about 5 points. But 5-7 minutes back, this was indeed trading about 20-25 points lower. So, expect a little bit of a volatile start as far as Indian markets are concerned. Let's have a look at how the ADRs also panned out. Most of them gained except for Dr. Reddy's. So, in terms of gainers, we had Tata Motors, Vedanta, Infosys, and HDFC Bank. As far as the losers are concerned, we had only Dr. Reddy's, which closed about 2% lower, so watch out for that one in trade. Now let's have a look at what cues we are getting from the commodity space. Well, oil prices are currently trading about 0.8% in the green, or just about there, after a 3% surge overnight, and the entire energy space will be watched out for because the S&P 500 was led higher by the energy sector, and yesterday in our Indian markets also the energy sector was in focus. As far as the base metal space is concerned, we had positive cues coming in over there, but no big moves really coming in from any of the base metals. So we had copper, which topped the charts, surged about 1%, tin also gained nearly 1%, while we had other base metals like nickel nickel, copper, nickel, aluminium, zinc, which also managed to close positive for themselves. Now, if you look at the Shanghai Futures Exchange, we have mixed start over there, where copper, zinc, and steel are trading positive, while we have aluminium prices which have opened mildly soft. As far as gold prices are concerned, stable around the 13-15 mark for that, as the dollar rally has paused a little bit. In terms of the fund flows that we got, the FIs and DI participation continues. DIs have bought 665 crores as of yesterday, while the FIs sold more than 700 crores. For the month itself, the DIs have pumped in more than 3,000 crores, while the FIs have withdrawn more than 2,000 crores worth of equity. In terms of the sector gainers or the key indices that we have, Nifty Bank, this was the interesting one, surged about 0.25%. But remember that this month it has gained on all days so far, so very interesting to watch out for. While we have the Nifty Mid Cap and the Nifty Small Cap Index, which declined in trade. This was largely in the second half of the day that we saw those declines. As far as the losers in the sectors are concerned, we had the Nifty PSU Bank and the Nifty Pharma, which ended about 0.5% to about 0.75% lower for themselves. As far as the gainers are concerned, we had the Nifty IT and the Nifty Energy Index, like I was telling you, that gained about 0.3, and we had the Nifty IT, which surged more than 0.5%. As far as the volatility index is concerned, this also has creeped up from about sub 12 levels to more than 14. Agam will take you through more details on that, and that is up about 1.6%. In terms of what led to the 24-point gain, we had Reliance, TCS, HDFC Bank, and Tata Motors, which contributed positive, while we had ICICI Bank, Ultratech, HDFC, and SBI, which contributed negative. But Agam, what's going on with the India Volatility Index?
Well, Jayesh, when it comes to some of these key indices, they remain range bound, the range are moving up higher. So before I come to the wicks, let me start off with the Nifty, and again, very little change in open interest, just about 2% added there. Coming to the Nifty Bank too, we did see a lot of traction day before, but this time around we're seeing another 3.5% addition towards open interest. The wicks, of course, it continues to edge up higher because owing to an event as we move into this weekend next. And when it comes to changes in open interest, more unwinding in the 11,000 call, and some more base formation when it comes to 10,700. Don't forget, maximum open interest remains with 10,400 and 10,500 puts. In terms of changes in open interest, PC Jeweler moves back into the band in among other stocks that we are keeping an eye on. We're also tracking Arvind, which has seen fresh longs coming in, and we're also tracking movements in Cholamandalam, where we've seen the stock down by as much as 3.6% and short covering there. So plenty of stocks to keep an eye on, and of course the benchmark indices going today's chart trade.
All right, thanks for that, Agam. Let's take a check on the rupee in the bond market now. The Indian rupee on Wednesday clawed back half of its intraday losses, but it still closed at a fresh 15-month low against the US dollar due to concerns with regard to outflows of foreign capital. Now, the rupee closed at 67.27 against the dollar, down 0.3% from its previous close of 67.08. The 10-year benchmark, a government bond also, it's essentially the yield has moved up and essentially wiped out all the clawing back that it did a little while back. It's moved up all the way to close to 7.7% from 7.5% earlier. With that, let's shift focus to the commodity space, and Jayesh Khilnani is back to tell you more in depth of what he was already speaking about when he set you up for the day's trade. Morning, over to you, Jayesh.
Thanks for that, Alex. So oil prices, like I was telling you, they have seen a surge for the second day running, currently up about 0.7% after gaining nearly 3% overnight. Now, what cues we picked up from the overnight session was that the US crude oil inventory that shrank by most since late March. In fact, the EIA data came in overnight, and we had crude oil inventory sliding by about 2.2 million barrels for last week, which is as compared to a Bloomberg estimate of an inventory increase so that was the positive for oil prices. As far as brokerages on the Iran deal are concerned, we had one from Barclays, and they say that the Iran oil output has been seen as unaffected in 2018 by the Trump move. So we'll have to wait for the 180 days or more details to come in as regards to the sanctions that are there. As far as base metals are concerned, the index itself surged about 0.5%. All base metals except closed positive on the London Metal Exchange. Now, a couple of metals where we got inventory data. The aluminium inventory declined 1.6% to about 1.3 million tons, and we had copper inventory also declining about 3.2%. So that was a positive for these two base metals, and both of them actually ended higher. Copper was 1% higher, which was the top gainer, and tin also rose nearly 1%, while we had the others like aluminium, zinc, nickel and lead, which also closed positive. Now, if you look at the Shanghai Futures Exchange, most of these base metals have started trading positive, except for aluminium, which is currently trading about 1/10 lower. As far as gold prices are concerned, we saw some bit of stability come about near the 1350 mark, as the dollar rally seems to have paused.
All right, thanks for that, Jayesh. Now, clearly, over the course of the day and yesterday, in fact, today for sure, everyone's going to be talking about Walmart, the acquisition of Flipkart. But, well, we're talking about that now. Walmart will acquire control of India's largest online retailer, Flipkart, in a deal worth $16 billion, which includes a $2 billion of fresh equity funding. Walmart will acquire 77% stake in the holding arm of Flipkart. The deal values Flipkart at an eye-watering $20.8 billion. Bloomberg's Harsha Subramanian essentially breaks down the contours of this mega deal.
It's one of the biggest deals in the world of e-commerce. The world's biggest retailer, Walmart, has acquired majority controlling stake in Flipkart, India's biggest homegrown e-tailer. Walmart has acquired 77% stake in Flipkart for $16 billion. That values Flipkart at $20.8 billion. What does this mean for Walmart? This deal gives Walmart a leading position in the growing Indian market and will invest $2 billion in fresh equity, which will help Flipkart accelerate its growth. That's exactly what Flipkart needs. This deal gives it greater firepower to continue the fierce battle that it faces with Amazon in India. That's not all. Walmart says it also supports its ambition to transition into a publicly listed entity in future. For investors, $15 billion bonanza, while details still remain a bit sketchy on who gets what, SoftBank, that invested over $2 billion, will walk away with a neat profit. So will the others. The rest 23% will still be held by Binny Bansal, Tencent, Tiger Global and Microsoft. Both Walmart and Flipkart will maintain their distinct brands and operating structures. The key question of would there be a change in management remains to be answered. The new board will consist of members from Walmart, Tiger Global, Tencent and a few independent members. The deal will close later this year, subject to approvals. In all, the intense battle in the world of e-commerce just got hotter, with Walmart, Flipkart on one side and Amazon on the other.
Clearly, that's probably good news for buyers, all of you sitting at home, and especially because the market in India for e-commerce is expected to rise to $200 billion per year, according to Morgan Stanley. Let's move on and talk about the fact that Walmart shares slumped nearly 3%, wiping off nearly $10 billion from its market cap, and that indicates that the investors on Wall Street are not essentially sanguine about the acquisition that Walmart has just done. But how does the deal change the dynamics in India, and is the premium valuation justified? Bloomberg Quint's Menaka Doshi talked to a host of experts to get their view on this.
When you look at these types of situations, the question is really around what if? What if it becomes as big as it can be? What if the opportunity of where growth is going to take the market in India is actually achieved? What if consumption shifts? You have such a large base of the population that still is yet to consume, and the first method by which they'll consume is probably a digital method. So much of this market is unorganized, so the organization is happening in a digital place. So I don't know that you can ever rationalize this and look at it and say, it shouldn't have been 20, it should have been 15, it should have been 25. We're not going to get to a multiple that anyone can look at here and say, okay, this is justifiable. Okay. I think you're really playing this for the fact that you believe in the upside of the market, you believe in the shift that's taking place online, and therefore you come to a negotiated agreement on what works for everybody.
I think it's a great deal for consumers in India. Clearly the deal is at a premium. And when you look at the addressable market in India, you can almost justify any valuation for anything. But you know, we're talking about when you're talking about valuation from a fundamental perspective, I think the framework that you have to use is the control premium that they've paid. And yes, this does represent a very significant control premium over how e-commerce businesses have been recently valued.
Okay.
So my sense is that, you know, in my mind, this is about a 30 to 40% premium to how businesses have been valued. But yes, I mean, India is one of the last places on the planet with huge addressable yet unaddressed market at this point of time. I think it's an opportunity for Walmart. I think this is more about India than about online e-commerce.
This is a milestone event. It may reset the valuation metrics even for consumer product industry, because if you look at the stock exchange multiples and all of that, this is completely different. Yeah. And I must say, it is clearly Walmart betting very high on India. It is betting high on its supply chain. It wants to kind of take a leap shift to a digital. Not only, I would say, it will impact its Indian operations, but also it may impact its global strategy. So the global strategy is reflected. India skipped the mobile PC revolution to a mobile revolution. The brick and mortar retail has been skipped in India. So this is a new bet which it has been put on India.
It's a valuation which is a strategic premium paid by Walmart to get into a large Indian market. After they did Jet.com acquisition, after that they got into this. You have seen Amazon making a play with Whole Foods in the offline space. So that is the valuation. So at these valuations, it's not a financial decision, it's a strategic decision to enter a market. I definitely want to be on the entrepreneur and seller side rather than on the buyer side.
Now, irrespective of how the valuation metrics panned out, it's good news for buyers for sure in this market. So let's see how that pans out for us. Let's move on now and talk about earnings. Rising input costs and a one-time hit caused a muted fourth quarter for Eicher Motors. Yatin Mota is here to take you through all of the key highlights.
Eicher Motors' fourth quarter earnings were marginally below expectations on the operational front. If you look at the revenue growth, that stood at an impressive 34%. Sales came in at a little over 2,500 crores. If you look at the EBITDA growth also, that was at 36%, but marginally below the street expectations. Street was working with a figure of over 800 crores. However, the EBITDA came in at 797 crores on an absolute basis. Profits came in at 461 crores and margins came in at 31.5% versus a level of 31% on a year-on-year basis. Of course, this time we had the raw material cost, which has clearly impacted most of the auto companies, and that is the reason why we saw some bit of pressure on the margins coming in. Also, we had a one-time loss reported by Eicher Motors on account of the winding down of the Eicher Polaris JV, and 187 crores was the exceptional loss which was booked during the quarter. Also, we had the employee costs which were slightly higher for Eicher Motors during the fourth quarter, and that also impacted the overall profitability. But if you look at the numbers, clearly on the revenue front, numbers came in line. However, on the operational front, there was a slight bit of miss versus the street expectations.
Well, on to earnings for today. The newest entrant into the Nifty 50 index, Titan, will be reporting its results today. Agam Vakil is here to take you through all the numbers. Agam, it's expected to be a good quarter for them.
It certainly will be a good quarter, Alex, based on the expectations and the continuation of trend of what we've seen over the previous 3 or 4 quarters as well. This time we are expecting a near 17% growth in revenue, expansion in margins by as much as 200 basis points to around 9.9%, and profits expected to grow 40.5% year on year. The reason, of course, is the big boost in the jewelry segment that we've seen on account of improved demand. Also, the shift from the unorganized to the organized, largely on the back of the GST implementation, and we could expect to see about 15 to 17% growth year on year when it comes to the jewelry segment, and a third of these sales will be the studded jewelry as well as some premium collections. Moving on to watches too, we're expecting a gradual uptick, should I say, when it comes to growth, and expecting about 7 to 9% growth coming in on the back of launches, and we'll keep an eye on what they have in mind when it comes to the key brands like Tanishq and Xylus.
All right, thanks so much for that, Agam. But how are rising commodity costs likely to impact Asian Paints in the fourth quarter? Yash Upadhyay filed this report.
We are expecting a good fourth quarter for Asian Paints. Their revenues adjusted for excise are estimated to grow by about 12% to 4,400 crore rupees on a year-on-year basis. EBITDA is expected to grow by about 17% to 834 crores. We are expecting a slight improvement on the margins front, coming in at about 18.9%, while net profit too is expected to see a healthy 17% growth, coming in at about 542 crores. Some of the key factors that we'll be watching out for would be the headline volume growth number in the domestic paint business. Now, the company does not actually give us an exact number, but we are estimating about a mid-single-digit kind of a growth, somewhere in the range of 5 to 6% or even 7% is what some of the brokerages are indicating. Anything more than that would be viewed as a positive. Other than that, we'll be also watching out for the gross margin trends. The higher raw material prices have impacted the gross margins, and is what we have seen in the case of Kansai Nerolac as well. So that would be something to watch out for. On the EBITDA margin front, we are expecting a slight improvement, somewhere about 50 to 90 basis points on the back of cost control initiatives and the price hikes taken by the company in the first quarter. That apart, we'll also be looking out for the demand outlook in the industrial paint business and the performance of their home improvement business.
All right, what are the stocks that you have to watch out for on account of them being in the news? Well, Shraddha Babla is here with the stocks and news. Morning, Shraddha.
Good morning, Alex. So first one on my list is Federal Bank. We saw a weak set of numbers coming in the bank misestimates, and that was largely on account of that cleanup and the impact of the RBI circular. So while net profit fell about 44%, you did see the gross NPA number jump from 2.5% in December to 3.0%. So big jump sequentially itself. But overall, even as brokerages have trimmed their estimates marginally to factor in this weak quarter, two key things that the management actually said will probably have a larger bearing on the stock. One is that the CEO said that the IDBI Federal Life Insurance deal that is expected to get finalized by July, and more importantly, the bank CEO said that they will announce a 26% stake sale in its subsidiary FedFina in the next 3 or 4 days. So that is something that we are going to be watching out for. That apart, you have Welspun Enterprises, which has emerged as the lowest bidder for a road project in Tamil Nadu at a bid price of about 1,800 crores. You have PNC Infratech. They've received a 34 crore bonus annuity from Rai Bareli unit. So some positive reaction likely there. Star Cement has received 200 crores towards subsidies claims. Generally, the stocks reacts quite a bit positively on the back of such news triggers. Then you have Syntex Plastics Technology. Now, on a sequential basis, it posted a weak set of numbers. We did see a net loss of 12 crores as compared to a profit of about 52 crores. But more importantly, they've said that KKR has infused about 1,250 crores in the company's subsidiary SPABL via structured finance. So let's see how that one reacts. You have a Mint report which says that Blackstone and Warburg Pincus both are in separate talks to invest in Max Financial Services for a minority stake. We have been receiving reports of on Max Financial stake sale pretty much in various reports. So these two names are coming up for this one. And on the back of bulk deals, you have KSB Pumps, where Kenneth Andrade's Old Bridge Capital Management has bought 1.1% stake. You had Vantage Equity Fund, which bought another 1.1% stake. And on the other hand, you had DSP BlackRock Small Cap Fund, which sold 1.3% stake. Nat Biogene, where Birla Sun Life Mutual Fund bought 0.6% stake, and then you have Sri Renuka Sugars, where we are seeing promoters selling increasing. So yesterday we saw promoter entity sell about 2.5%. Today you have the promoter entity Murkumbi Investments, which has sold another 1.4%. So all of these to track.
Yeah, thanks for that, Shraddha. All right, let's move on. In what is very similar to a script from a movie, Mahathir Mohamad has won a stunning victory in Malaysia's election, ending the 6-decade rule of Prime Minister Najib Razak's party. Now, Mahathir, who is Malaysia's strongest serving premier and who also defected to the opposition to take on Najib, will return to power at the age of 92. And what's interesting is that Najib was Mahathir's protege. Well, there's clearly lots to talk about over the course of the day, and you'll find all the live market action right here on BloombergQuint.com. But there are also several stories that you'll find on the website. Here are just a few of them. 4 directors of Fortis Healthcare, in a letter addressed to stakeholders, have made a case against their removal. They said a complete change in the Fortis Healthcare board at this stage would lead to more turbulence and ambiguity for the company as well as its management. North Korea has released 3 US citizens who had been detained for as long as 2 years in a goodwill gesture ahead of a planned summit between President Trump and Kim Jong-un, as expected in the coming weeks. Now, Forbes has come out with the world's 75 most powerful people for 2018, and it contains an Indian, some tech honchos, and the heads of state. Now, more importantly, it's a new man at the top of the list. Find out who it is. On that note, this is the end of Daybreak, but up next is all you need to know, so do stay tuned. This is Bloomberg Quint.